Hello everyone, me and Mayank back with another financial video. And today, specifically, we are going to talk about my last video. And content of my last video was how can you become a millionaire by regularly investing smaller amount of money into markets, and over the long period of time, it will compound. And I actually predicted that if you put $50,000 yearly into the market, then over the 6 to 8 years of period, you will actually earn $1 million of equity and you can achieve your financial freedom. So today, both of us has wider views and we want to talk about here, and we are going to present you both of our thoughts and think about this discussion as two different minds colliding, and both of them is right. Both of them has good strategies, and my aim by doing this video is to cover both strategies. I don't want to create a skewed view like my perspective, and you guys just stick to it and adhere to those laws, and you might not able to learn other side of the market. So let's talk about those things, and let's welcome back the Mayank.
No, it was good video, but yeah. Hello everyone. Good to be back. Just So Naimesh came up with this idea saying,
Mhm.
why don't we just discuss kind of on air to figure
Mhm.
out what
Yes.
what is the issue I have with that video. I don't have any
Mhm.
specific issue. I think there is bunch of things he missed out
Mhm.
on
Definitely.
expenses and
Mhm.
some of the income level. I mean, some of the stock market returns are
Mhm.
kind of wrong
Yeah.
in terms of
Mhm.
history.
Mhm.
So, so yeah, basically that's I commented out, and then it
Mhm.
looks like Nimesh took it by heart, and then
Well, I wanted to cover both of our perspective. So specifically, we are going to talk about a couple of expenses which I missed, then market returns, and my strategy is more about taking few more risks, and my strategy is about playing it more safe. You are just starting it out. Well, before we jump into this one, Mayank, why don't you tell my users or my subscribers that you have your own channel? Just do the advertisement for your channel, man.
so, no, this is great. But yeah, check out my channel. I make videos on teaching people on to gain some of the passive income ways. So I'm all about setting more income. So that's my goal. While I teach my audience, I want to also join and do the POC myself, and then
Mhm.
share it with the other people. So that's my goal. I'll be
Mhm.
making videos, yeah, and subscribe to my channel when you get a chance, and do that for Naimesh as well because he makes
Mhm.
way more videos than me, and he's very his work ethic is on another level. So we're all trying to get there. But yeah,
Yes.
um,
Mhm.
yeah.
Well,
So yeah.
I'm very much excited, man, that you joined this content creator economy, and I'm happy for you. While let's talk about the very first thing. Just why don't you tell me a couple of expenses which I missed out?
So multiple things on. So first thing I noticed because I know Naimesh very closely. I know his kid is probably the most expensive person
Mhm.
in his family.
Yeah.
So I think he missed out bunch of things there because I know
Mhm.
family who has kids and the expenses one child can have.
Mhm.
So I there's things there to be added, and then there is like regular car expenses. I mean, car maintenance. Of course, we drive the gas car,
Mhm.
so the maintenance there, oil change, and all that. But you don't do that every month. But even though you don't do it, you have to account for those things and then
Yeah.
add gas
Mhm.
money to it, things like that. And
Yes. Mhm.
yeah, so there is the
So this,
transport. Yeah.
yeah. So these were all valid concerns. So as Meng has pointed out, car expenses, uh, gas expenses. Then I have a kid, and my kid is just 15 to 16 months old. So if you guys are considering to do this at this stage when you have a kid, then you also have to consider those expenses. And one more thing I think Mayank wanted to tell me was every one of us take a leisure vacations maybe every 2 or 3 months. So we also have to talk about those miscellaneous expenses. So I think these are good points, and I 100% agree that I missed out. And one thing I wanted to raise the point is uh, you can afford all these things, and the way you can afford is earn more money. I think Mayank can say more about this one because the way I learned how to make more money is from the Mayank, and then all of us get comfortable into our boring jobs, and the motivation is to earn more money. Why don't you say a few words about there, man?
Yeah, that's definitely true. I mean, any goal behind doing any of the new activity is to earn more money, and
Hmm.
of course, earn some new skills. So with the skills, money will come. So I
Yeah.
think that's what Naimesh is trying to do. That's what I'm trying to do.
Hmm.
That's basically everyone should try.
Hmm.
So if you improve your skills, if you get into learn something new and promote it, of course, the money will follow.
Hmm.
So
Definitely.
that's the goal here.
Yep. Okay, so I think the second topic is very much interesting, and both of us had quite a discussion right before this channel. So right before this interview. And why don't we talk about the market returns, man? What is your perspective, and where do you think I'm wrong, and lay out all the options for us?
So couple of things. I think the average. So let's
Hmm.
say there is an index fund. You're investing in an S&P 500 index fund, and then I'm also doing the same. I have.
Hmm.
I think if you look at the history of any index fund, index fund first came in 1970s, right? So
Hmm.
you see the overall stock market history, last 100 years, the stock market has returned around 7 to 8%. The best,
Hmm.
the best years, I mean, I'm talking about average. So if we just
Average, yeah.
consider average, then 8% is with the dividends invested. So it's not like taking out the dividend. So my guess was around 8%, but Naimesh mentioned in the video around 12, 20%. Though those are the years, I mean, we had years like that, which are 12%, 20%. Like last year was
Hmm.
22%, this year is 18%. So, of course, we had years like that, but it's not going to be consistent. It's not like every year is going to be
Hmm.
like that. So, I think
Yes.
that's what I pointed out. So, I think that's
Hmm.
something to consider here.
And I think when you are thinking for 8 to 12% is a pretty safe bet, yes. And when I think about this, we both of us has 401k, and both of us are pretty much actively putting our money there. And when I am trying to take an investment strategy, I think my 401k is in that bucket, 8 to 12 bucket. And when the second portfolio is all about, I actually took out my money, and any money which is left off, I try to choose the individual stocks. And in specific video, I think this was also a pretty hard pill to swallow for the mind, because I laid out that Google, Facebook, Amazon, and Nvidia and Salesforce, these are the big companies. Past 10 years, they have given the 20% plus year over year return. So I think when I say I can get the 20% return by identifying these companies. And what do you think about this?
That's definitely true in certain cases, but I think overall those companies are doing good. Overall, they
Mhm.
are best companies. So they're top.
Mhm.
Of course, they are in top 30 companies. So
Mhm.
they have a good returns as well. But my point was that it's not going to be consistent. So if we say that we are going for a long term,
Mhm.
I mean Tesla is not going to go another 5,000% up in a one, right? So
Mhm.
like that we have to consider. So I
Mhm.
mean, we had the best year of our
Mhm.
life in the stock market the last
Yeah.
year, and right.
Mhm.
So I think I don't see it continue like this for
Mhm.
another years or so.
Mhm.
So we
Yeah.
keep this in mind. That's when we see that the 20% number is becomes a bit tougher than
Mhm.
we, because I feel we haven't seen the bear market. So think about it. In the last
Mhm.
10 years, we are in this understanding of stock market,
Mhm.
10 years, right? So all
Yes.
this from 2008, the market has only been going up and up, right? So
Mhm.
we never saw the bear market. So I think we are not used to seeing
Yeah.
the thing going down. So
Definitely. Yes. So I 100% agree with the mind here. If any of you are coming at this, like if you are thinking that I'm telling you 20% in perspective to 2020 and 2021, you're completely wrong here. Those crazy returns like 50% and 100% return, you are never going to see in your lifetime or my lifetime. And this opportunity will never come back. But this is the question I want to ask, man. I think uh, at this market cap, Tesla has somewhere around 700 or 600 billion market cap valuation. Yes. Let's say if it doubles, then it would be somewhere around 1.2 trillion dollars, and it would even still not reach to uh, it would not even still reach to the Apple's market cap or Amazon's market cap. If Tesla gives us 20% return again, then it would go on for 4 more years. So I'm definitely thinking that in within a 4 years, Tesla's market cap will double. And if we put this mathematics or calculation around, then Tesla will definitely give us 20% return after 4 years. What do you think about this?
It, I think it can happen, but I don't see it happening as fast.
Mhm,
It can happen because Tesla
mhm,
definitely has a chance to grow
mhm,
exponentially. It's not
mhm,
as big of a company as we think it is. I mean,
mhm.
there's more market cap than Ford and all the other companies, but yeah,
Yeah.
I
Mhm,
feel it has room to grow. It's not like
mhm,
Apple and Amazon because
mhm,
Apple and Amazon, even though they are growing, it's
mhm.
already at their cap. So I mean, Apple is breaking all the records. I saw the earnings, and they
Yeah.
they came
Two
out breaking
trillion.
all the records. Yeah.
Yeah,
So
they both of
yeah,
them. I think Amazon, Microsoft, and Apple, all
everyone, yeah,
three.
yeah, all three companies broke their earnings
Mhm,
expectation, and Apple
mhm,
broke by $8 billion. So
mhm.
so it's not, and then the stock went down. I don't know what happens in the market.
Yeah,
Yeah.
definitely. I'm 100% agree. So I think my so I'm more optimistic here, and Mayank is taking a different view here. That uh, well, obviously, Mayank, it wouldn't happen in 2 years, but I'm thinking that let's give it a 4 years. It would be 2025, and within a 2025, there three different factories will come online. Um, so there three different factories will come online, and with that, they would be easily able to scale up their production of vehicles. And I think in 4 years they can double their market cap. So
That,
I'm saying 20%
that
return
is
would be
true.
in 4 years.
That is true, but we also have to keep in mind a calculation based off the stock price doesn't directly correlate with the market cap. Because
Hmm.
if that's the case, then Apple's market cap is highest and the stock price is still 144. So
Hmm.
if you can plus four times because they just split it. But
Hmm.
yeah, if you think like that, Amazon's market cap is above 2 trillion, but their stock is 300. But if you
Hmm.
count Tesla stock is around what 3,600 now if you count the whole without the split. So I think it's what above $4,000 for Tesla.
Hmm.
So in
Yeah.
those,
Hmm.
the point is that the market cap doesn't always go parallel with the stock price. So we have to keep those calculations separately.
Okay, I think I took it. Maybe I gave you a wrong perspective here. I'm just not talking about Tesla. Maybe let's talk about one more company which I'm definitely passionate about. So this the skills, yes, or a Palantir, and these companies, let's say, are also tech companies. Not now. One thing to note here, everyone, is I'm not saying all of these companies will double in upcoming 4 years, but whenever we are trying to invest it, we
Yeah,
always take the
they will
probability
double.
of.
They will definitely double. I agree on that. I mean, they have
Mhm.
so much room to grow.
Yeah.
It's the same logic. Like if you buy a house that's worth $100,000 in the bear market, of course,
Mhm.
in the bull market, that house is gonna go at least 50% up. So it's the
Yeah.
same logic with the stocks. So they
Mhm.
what is what $14 a stock, and then Palantir
Yeah.
is
Mhm.
21 something.
20, 21,
Yeah.
$22 of stock.
Yeah,
Mhm.
so they will definitely double in
Mhm.
2 3 years. So that is for sure. But
Mhm.
of course, right now they're losing money. I think skills
They
is
are.
losing money, so
Mhm.
they have room to grow, and hopefully they do grow. So I
Yeah.
have yeah, that is one of the good companies. So
Yeah,
that's a good.
both of us love these companies, and other one other company both of us can talk about is SoFi, because both of us are in finance, and I have an account with a SoFi. So if I go there and I just do the apple to apple comparison with uh, Bank of America and Chase account, it's a radically different product, and they have a really good user experience. So I think when I told you that Tesla will double, I'm just saying that uh, these kind of companies who, even though gave us the phenomenal returns in 2021, let's say even though they have a down period for 1 or 2 years, but when we try to do the 72 rule for the compounding, it would be around 3 to 4 years to double it. And I think those will be also the phenomenal or good return for us. And let's say I'm saying you put a Palantir or you buy a skills, then it would be just your stock has to just double 2 times, and you would be 8 years of mark, and you would have actually phenomenally overgrown your capital from $10,000. Yes, it would be like 4 times your money in within 8 years.
That is, yeah, there's definitely chances. There is so much growth companies. So I think we are both mostly focused on those companies, and they have much more room to grow.
Hmm.
So I tend to not go with the Apple and Amazon and
Hmm.
all those because, of course, they're growing, but the price itself and the investment doing them, I
Yeah.
rather just have them in index funds. So
Hmm.
that,
Definitely.
I won't focus on buying them separately, but I
Hmm.
think yeah, it's a good company. So of course it's a good investment. Long
Hmm.
term, no payout. Yeah.
So I think this was a good conversation, man. And do you think anything else did I missed out in my video? And do you want me to put it out there?
I think this is it for now.
Yeah, this is it for now. And good conversation, man. And let's do the pitch one more time. Everyone who is watching this everyone who is watching this video, please like our videos, subscribe, and tell your friends that we are trying to actively participate into this content creator economy, and just share our videos with everyone so we can also earn a living out of it. And if we do, then it would be the right content for Mayank's channel. Mayank, why don't you give your
For sure.
own marketing pitch?
For sure, yes. I think everyone should do it. I mean, for me, I thought it's a bit tough, and it is tough. But I think we all should get into it. I think
Yeah.
it's a useful thing to do. It's a good notice and it's a good practice.
Hmm.
I think there's a lot of learning to do and things like that. So
Hmm.
there's so much benefits. I don't
Hmm.
see any not being on social media and not promoting yourself, any skills that you have.
Yes.
Well, of course, there is somebody needs some sort of learning out there.
Hmm.
So you just have to
Definitely, man.
you just have to go out there and teach.
So, Mayank, his channel name is Mayank Patel, yes?
Yes.
And I'm going to put his channel links into the description. So please check out his videos. Yes. And we'll see you guys in next week. Bye,
Yep.
everyone.
See you guys.